Hello traders, the title of the video is Elliott Wave Trader explains his complex waves counts. Alright, so if you have been counting Elliott Wave for some time, you will come across a complex Elliott Wave that will give you all sort of problems, alright, and you have to deal with it and fix it, alright. In this tutorial, I want to explain to traders my complex wave count. We are looking at Hasbro Incorporation. Is my pronunciation correct, my friends? If not, let me know in the comment section. Very important, alright. So the EPIC is HAS, Hotel Alpha Sierra. Hasbro Incorporation, belonging to the consumer cyclical sector. It's an American stock, and we're going to talk about an Elliott wave trader explain his complex wave count. I have found this wave count a bit complex, and I want to share with you my complex wave count. Hopefully, you will learn something from it, or you will add something to it. So we may all learn from each other. All right, let's begin. The explanation of my complex wave count. All right, because I start counting wave here is quite messy to know where is the first wave, where are we now. In fact, if I quickly show you on the yearly chart, you understand what's going through my mind. This is not straightforward. You can see that the price going almost vertical here with all the shadow on top of candlestick bar here. What's going on? Where are we? Talking about the higher degree wave count, and what's going on with Hasbro Incorporation. All right. So one thing I need to share with traders very fast is that look at the volume bar here. You can see that we have a surge in trading volume in this session here. All right. In 2010, that's one thing that is also helping me a bit to figure out exactly what is happening here, looking at this complex price structure. All right. So very often we know one thing that can also help us is that the surge in trading volume sometimes will signal, all right, will signal the beginning of a new trend. We usually see that. All right. If you see here, we have more than 600 million shares being transacted, during this month, month of December 2008, and also in the month of December 2009. All right, that's correct. December 2000. That's correct. December 2008 and 9. So on the yearly chart, you can see that 2008 and 2009 we have a surge in trading volume, alerting us that this is signaling the beginning of a new trend. This is something you need to understand if you are counting wave, or if the area wave count become very complex. The surge in trading volume bar can also be used as a reference point. All right. So this is one thing you need to understand. Going back again to so you can see one session here. You can see how the price went vertical. So we can also, with that, we can also say that definitely this is an impulsive price move in this session here. All right, this session here is an impulsive price move. It's not a corrective wave because the price is going vertical. All right. So with those information on the yearly chart, let's go back to the monthly chart. You quickly realize that it's quite complex, this wave count. So because I cannot zoom into those years of, I would say from the 1990 to 1999, all right, I can zoom into it to see everything clearly. I will just call it, all right, with your permission, I will just call that session as a training phase, but because I can't zoom into it to tell you exactly what has happened here, whether we had a flat correction at the end of that training phase, I will just call all this session here as a training phase, okay? We need to start from somewhere, and that's all I will do, trying to simplify it, because if it becomes too complex, you can simplify it without diluting it. looks like a trend in this section here. Another thing, as I was telling you on the yearly chart, you can see that again here we have a huge surge in trading volume again here. Usually that will occur during a trending phase. Okay, so that's the starting point. Then we have, after that trending phase, if you agree, then we have a correction. Price came down. Okay, this one is correcting the previous trend. Okay, but as the correction reaches this point, okay, so in fact we can use Fibonacci. Okay, hold on please, traders. If you apply Fibonacci retracement to that trending phase, I will use I'll highlight it from 1990, all right, because the stock market was bullish those years. So just put it here, all right. Apply Fibonacci retracement from here to the top of that candlestick bar. If I pull back to the 78% level, that's the correction. Color the correction to pink. After the correction, the price form a double bottom chart pattern. All right, here it is. One. Sometimes they will say A, B, C. This point here they call it A. This point they call it B. This one they call it C. So the price form a double bottom chart pattern. What I usually recommend to traders to do when you see double bottom, you can also cover it. All right. So if you have been following us, you know that we have done this before when we are dealing with complex wave count. Some traders may disagree, but it is very, very useful to cover the double bottom if it doesn't make any sense to you, because sometimes just covering the double bottom will help you to will start simplifying the price structure. All right, so just know that we have A, B, C here after that correction there. Okay, so let me say it's a zigzag 1, 2, 3. Well, it's up to you. But the truth is that it was a correction, whichever way you call it, it was a correction, trending first and a correction. So after that correction, the price start going up. Okay, so I'm covering my double bottom here. This one thing I do, so you see, the price start going up. One. Then we have second wave quite long. You see here, very long. Let's start putting a bit of color into it to make it very interesting. All right, make it very pleasing for your eyes. Call this one second wave. All right, and then we have, look carefully, my friend, pay attention carefully here. The third area wave is the third area wave. Shouldn't be the shortest multi-wave in comparison to the first and the fifth, the fourth area wave. And the fifth area wave. You're going to learn something new today. You can bet on that. All right. Let's continue our way. We're going to see very soon. So if you start disagreeing, you have a good reason. You see why. If you disagree, if you disagree, this is a trending first. I agree with you. Very soon you'll see that we are seeing exactly the same thing. Though the price structure did look like an impulse wave, because we did not have any area wave violation here. First wave, second wave, third wave, fourth wave, and the fifth wave right there. But the reason why I say to you, I tend to agree with traders that refuse, so to speak, to accept that this is another trending first. The reason why I agree with those traders is because you can see that this was a prior high, yes or no? So if we call this 1, 2, 3 as a new trend, look, it didn't go very much above that. So we will be thinking that this is not a proper trend. So I will say that this is what I like to call X. It's a failure of a trend, though it has the structure of an impulse wave, no violation of area of count. You can see that it did not go very much above the previous high. So I discount this as a proper trend. You may disagree with me. That's fine, because you have a good reason to say that, because the structure did not violate. Yes, there's a bit of violation here. Look carefully. You see that the fourth wave almost overlapped the first wave. You can see this is a question a trader asked me one time about the tail. See, the tail pierced the first wave. Now, in this case, I will say that this is an Elliott wave violation because why am I calling this one a violation? Because it's not because it pierced through the first wave. The fourth wave should not overlap the first wave. You can see that it got a tail and quickly went back above it. Sometimes you have to use your own judgment to accept it whether it violates or not. But the reason why I'm calling it a violation, in this case, you may disagree, is because if we consider 1, 2, 3, 4, 5, that supposed to be a new trend did not go above the prior high. So it's not because there's a tail pierced through the first wave here that's why I'm discounting it. I'm discounting 1, 2, 3, 4, 5 as a proper trend because it did not go very far above the prior high here. Therefore, though it has the structure of a trend, if you call this as no violation, all right, I discount it as a trend because it did not go very far above this one here. So I will prefer to call it a failure of a trend. It's a failure of a trend because it did not go very much above this high. Though it has the structure 1, 2, 3, 4, 5. If you discount this tail as piercing through the first wave, but if you consider this as piercing through the first wave, then definitely this is not a trend in first. But it looks like a trend in first, but the only reason why I'm discounting this as a trend is because it didn't go up very much above the prior high of the prior trend. Therefore, I'll call it the failure of a trend, calling it X. So trend in first, correction, failure of a trend that we call X, followed by another correction. So the X wave, as I explained to trader, will connect two, corrections. So this is another correction here. You're going to see very soon that things will start making sense because when we start doing this kind of exercise, you just keep going, all right? You keep going, all right? If your judgment is completely wrong, something may not add up as you are progressing up. Now, remember that on the yearly chart, we quickly discovered that this session here, this one here, cannot be labeled as a corrective wave. This is something good that we have seen on the yearly chart. Very good, isn't it? We also noticed the surge into the volume that probably around 2010, 2008, 2009, beginning of 2010, there was a trending first because of the surge in trading volume. So with those information, if we go back again, it's not easy, this one. All right. So you can see that. So trending first, correction, X, correction. All right. Now, you see, the surge in trading volume, as you can see on the monthly chart, is somewhere here. The trending phase has begun here. So now we start a new wave, new trending phase, first wave. You can see now this first wave, this is the characteristic of the first wave. Will break resistance on the left-hand side. You take this one out and take this one out. This is very good. This is a very strong move. So I'm quite happy to accept this one as a first wave. Which color should I use now? I'm running out of color now. Okay, I'll color it again, orange. That's the first wave, okay? A new trend has begun. After the failure of this trend and the correction, a new trend has begun in 2009. So one thing you need to understand, in 2009, this is one thing also we use, the reference point 2009, the stock market was starting a new trend. The S&P 500, the market has begun a new trend. So this is good. We see all right, strong first wave. In 2003 also, we have the commodity boom, all right, from 1990 to 1999. This is the tech bubble, all right, technology sector was booming, all right, and most of the stock was trending. So everything is looking good. So reference point working perfectly for us. In 2000, we see that we have a correction in 2000. In 2003, new commodity trend has begun. So again, though we call this one a failure of a trend, it's supposed to be a trend, but it didn't go up very much without going too far away above this high. We discount it as a trend. We call it X, followed by another correction. Now, a proper trend, that trend that has failed, is resuming now in 2009, okay, when the stock market began a new trend. So this is second wave, followed by the third wave. So now it become a bit tricky again. Where is the end of the third wave? You can see here. Where is the end of the third wave? Is it here? The end of the third wave? Is it here? Or is it here? I want to explain to you something that you can do. All right. So you see, first wave, second wave. All right. Now we need to use Fibonacci extension. Apply to our. Oops. We need to apply Fibonacci extension. All right. Apply to the first wave. Yes or no? Why? Because if you want to find the third area wave, we know that the normal third area wave will not exceed which level? 161.8% Fibonacci extension level. That's normal. So we will say normal. So we say first wave, second wave. Where is the end of the third wave? Because it's a bit complex here. We are not we can't see clearly. We say then we can use Fibonacci extension. Say okay, we have two types of third area wave. One is the normal third area wave, and the other one is the extended third area wave. The normal third area wave very often will stay below the 161.8% Fibonacci extension applied to the first wave, and the extended third area wave will go above that 161.8% Fibonacci extension of the first wave. So I'm going to call out in red the 161.8% Fibonacci extension level of my new first wave. So first wave, second wave. Now we want to figure out where is the third area wave. If you look carefully here, my friend, look, this is 161.8% level. Look at that bullish tendency bar that pierced through it. All right. So this is a continuation. Okay, the move that is starting here did not stop at 161.8%. There was no resistance. We can call this one third area wave here, looking at the structure here. Okay. It's not looking good. Therefore, because that bullish tendency bar pierced through that 161.8% level, I will say that my third area wave has ended here. Right there. All right? That's the end of the third area wave because of this tendency bar pierced through. That's the third wave of my new trend. Okay, you see that this is not easy, huh? And then followed by the fourth wave. I'll color the fourth wave again of our new trend into a pink. All right? Now what's going on here, my friend? We have now the fifth wave that is extended. First minor wave of the fifth wave, my friend. Do you agree or disagree? Let me know. Second wave of our second minor wave of the fifth wave, and the third minor wave of the third of the fifth wave. This is the fifth wave extension here. And you see, this is a tiny fourth minor wave of the fifth wave. So we are now in what? In the fifth minor wave of the fifth wave. Understand that. So sometimes they may say that, oh, right. So we will have a reversal from here. But you need to understand that anytime you hear the word fifth, just chill out and say that fifth means possibility of extension. As you can see, the real fifth wave is this one has been extended. 1, 2, 3, 4, 5. But the fifth minor wave or the fifth wave can also be extended. So it's a double extension. You have the fifth wave of our new trend. So are you with me? First wave, second wave, third wave, fourth wave. Now we are now in the fifth wave that is extended. 1, 2, 3, 4. The fifth minor wave of the fifth wave itself can be extended. So this is why sometimes traders find it difficult to call the top of the market, because they say that's the fifth wave and it's shelf. And now the fifth wave is extended. Or they say your forecast is completely useless. No, the forecast was not useless. It's a fifth wave, but that fifth wave happened to be just being extended. And then you say, oh, you said it's the top. Oh, no, it's not yet the top. Oh, it's not the top. Anytime you see something you call it fifth wave, put the question mark. You say fifth wave. Is it going to be extended? So you say possibility that the fifth wave may be extended. So therefore, our real fifth wave is an extended fifth wave. Use green now. Let's see the fifth wave. That is subdivided into 5 minor waves. But we are now in the 5th minor wave of the fifth wave itself. And anytime we hear the word fifth, whether it's a 5th minor wave or fifth wave itself, we just need to remember that fifth, okay, should bring into mind possibility that extension can take place. So that's why I leave that long. Okay. So where is it going to end? That is the question. Where is the fifth minor wave of the fifth wave itself going to end now? So you can see that if I remove all this line now, all right, or if you watch this video, what you can do after you watch it, all right, if you want to trade this or if you want to practice your complex wave count, all right, don't watch the video. And after you finish to watch the video, go back to the chart yourself on a monthly chart and see whether you can put everything together. So one exercise that we can do, or a trader can do to improve their wave count, is that now I'm telling you about my wave count. I'm explaining to you my wave count, my complex wave count. Now put my complex wave count, all right, to the side, and then try to put everything back together and see whether you will be able to do it properly. You'll see that it's not easy. It's like a puzzle, all right? Somebody put it together and say, oh, this is an elephant, all right? Then they break it down and say, oh, put it back together. It's another matter. Though you have seen it that the final product is an elephant, the shape of an elephant. But when you yourself, they break the puzzle down, they say, okay, put all the pieces back together to form the elephant. You may not be able to put it together. So try to do that with this complex wave count, because it took me some time to figure out what exactly is taking place here. All right. So even if you are an experienced area wave trader, you may come across some price structure that will give you a bit of problem, and you will take a bit of hard work, so to speak. You see now, I'm doing working hard, sweating, okay, before I figure out what is taking place here. So I put these puzzle all together now, okay. So what we have here is that this is my wave count, by the way. So this is a trending phase for this stock. I would say from 1990. I prefer to call it from 1990. You see the bit of move here because I can't zoom into it. That's all I can say. Just accept it as a trending phase. Call it in red, all right. And then we have okay, a correction followed by ABC, a double bottom. According to my wave count guidelines, I cover it. Okay, if it becomes too complex, I cover the double bottom. So, trending first, correction. Now we have 1, 2, 3, 4, 5. Now, because they don't go very much above the prior high, I call it a failure of a trend, though it almost has a structure of normal impulse wave if we discount the tail of this currency bar, because trader asked me one question. So this is it. So you have to use your judgment whether you want to accept it or not. All right, so that's what I would say. If you have a long tail sometimes, so because the price goes down, okay, the tail here went into the range of the first wave, but quickly close above it. It's up to you. You can accept it with a question mark on it. All right, so you accept it, put a question mark on it, and move on as I did now. And if you are wrong, you will see later on that something may not add up. Then you will say that, okay, I have to discount this one. All right. So this is the X. So trending first, correction, X, correction. So the X wave will connect to correct wave. It's a failure of a trend. All right. So I explain why I discount it. Just because they don't go very far above the prior high. All right. We talked about this before, the 138.2% Fibonacci extension. Never the first resistance after the price breaks above the prior high. It didn't even, just almost double top here. Yes. So X. Another correction. Now, a new trend has begun in 2009. Again, we were using the reference point 2009 because the S&P 500 has begun a new trend 2009. In 2003, we have the commodity, okay, boom, okay, trending fell, but this one has failed for Hasbro Incorporation. All right, from 1990 to 1999, there was a trend there, a correction in 2000. Here it is. Everything is now adding up beautifully. So now from 2009, before this stock, okay. This is the first wave. Second wave, let's put a bit of color into it. You high definition computer users, All right. So traders are using expensive computers. Why not use beautiful colors to make this wave count more interesting? All right. So traders say, oh, you are too boring. We want to keep it too straight. All right. We don't want to add too much color to it. So first wave, second wave. Now this is the third wave. You can see that the third wave was not easy. One more time, we use a simple trick. Normal third area wave, two types. There are two types of third wave. Normal third wave and extended third wave. Normal third area wave very often will not go above the 161.8% Fibonacci. All right, extension level of the first wave. This is the first wave. We apply Fibonacci extension, and we can see that if if you see, if this point here was here, we will say, oh, we have a normal third area wave. But look at that bullish tension, just pierce through it. So therefore, I'm calling this from here all the way up here, our third area wave, followed by a pullback. So you understand? We say that valid the breakouts. Did you subscribe to Day Pro Trader YouTube channel? If not, run quickly and look for Day Pro Trader YouTube channel and subscribe today, because we are talking about Fibonacci. In fact, if you are trading area wave, you must master Fibonacci. Right? So you understand the structure of what we are doing. We have stochasticmoney.com, normal technical analysis. Then we have area wave website, 24elliottwaves.com, and then we have Day Pro Trader for Fibonacci. So that you cannot use area wave without mastering the Fibonacci. So valid breakout, as I told you, Day Pro Trader takes place above the 161.8% level. So this is another. So if this is a nice signal here to catch the fifth wave, boom. So understand that when the price was here at that point in time, it is normal that trader may call this the fifth wave. So they will say, okay, first wave, second wave, third wave, fourth wave, and fifth wave. So here, this is what we are saying. Anytime you hear the word fifth wave or you label anything fifth wave, just understand that that fifth wave can be ascendant. So that's why sometimes they say, Joe, you say that this is the top. What's going on? So if I pull back a bit, now it's extended. Now we see that it's extended. We are now again in the fifth minor wave of the fifth wave itself, which also can be extended. So we can call it now that, okay, our normal fifth wave been extended, and this is the end now. We can't say that. All right? We can say that now. So because that minor, the fifth minor wave or the fifth wave can also be extended. So if you get a bit confused about fifth wave extension and the fifth minor wave or the fifth wave extension, if you get confused, it means that you need to go to our website, 24elliottwaves.com, digital, digital, elliottwaves.com, to check the fifth wave extension. Right? So you watch some video, read some article there, you hear me talking in my beautiful accent, right? That is to make you laugh a bit. So here it is, okay? So we are now in the fifth minor wave or the fifth wave. So my complex area wave is now completed. I have, put together that difficult puzzle all together now, and everything is aligning beautifully. So we are now in the fifth minor wave of the fifth wave that is extended. Prefer orange here. I like I like to use orange for the third wave or the fifth wave. Here it is, beautifully gorgeous orange chart. Right? You see now? Is it making sense now? You see, it's beautiful. Here we are. Will the fifth minor wave be extended? That is the question. Will it be extended? We will see. All right. So now today we will see, Joe, we should sell it now. Don't rush, okay? So now that we see that we are now in the fifth minor wave or the fifth wave, you see, oh, Joe, where is he going to stop? Start drawing line. Start drawing line. So you connect these two lines that you see here. This point and this point, we connect. You see a prayer bracelet board. That's the fourth minor wave or the fifth wave. All right. So you want to figure out where that fifth minor wave will end. I'll show you. Or you don't want me to show you. No, this to make you laugh a bit. All right. So okay. what I'm going to do, because I draw this line first, one, retest here, I'm doing the opposite a bit. Normally we use a low and a higher low, and then we select 1 point here to make it parallel. I'm doing the opposite now, which we can do sometime. Hold on, please. I will explain to you what I'm doing here in a minute. Now, let me explain to you. So, instead of using a low and a higher low to draw the first line, and then select 1 point at the top to make it parallel, I'm selecting first the two tops, this one, and I'm drawing the first line. Okay, then I'm choosing this point here, this one here, and I'm drawing a line to that point that is parallel to my first red line. That's what I did now. So, to them may wonder, Joe, you are doing things a bit different here, because I prefer this one like this, because it retests nicely here. I give priority to the top one here instead of this low and higher low. So, you understand how I did it here. All right. So now we have a red channel here. Okay. So I'll move this point here. I have a red channel there. So you want to know where that fifth minor wave may end, because it can be extended. So we can use now market geometry. Have I said that we can combine area wave and market geometry? Yes, there is a video, in fact, at 24 area wave YouTube channel. Oh, by the way, there was a trader that asked me a question about is it Dow Jones and Russell 2000. I need to go back to Russell 2000 to check what's going on there. I promise that I will look at it. I think I was looking for Russell 2000 on TC 2000. The epic is RUT, but I'm not seeing it, all right? I don't know why I'm not seeing it now, because my thing has changed it. So now that we draw that red channel, we measure the width for that channel, applying the market geometry, and we project it up. So there is a resistance up there that can help us. So if it's coming up near the top, are you getting it now? It may stop there. If it breaks above it, we project it one more time until we see a clear-cut violation of the market patterns. So we can keep doing that to have a bit of idea. Where are the possible resistance levels? Understand that when you draw a true line, don't forget also what? The median line. Anytime you draw a channel, don't forget to draw also the median line. So between the blue and the red, there is a median line somewhere there. So don't forget it. Okay, I don't want to leave it there. Don't forget that there is a median line right there. So this is one thing that you can do if you want to know where that fifth minor wave may end. It may end here, it may end near the median line of the top channel, or may come all the way here, or may continue all the way up here. That remains to be seen. But one thing is certain, okay, when that will happen, all right, we can use other tool again. All right, which one? We can use again the pitchfork tool. So is it getting too complicated? We talk about how to combine area wave and pitchfork tool. All right. So 3 point. This is what I see here. So the first point, this one here. The second point, this one here. The third point, this one here. So I have my tiny pitchfork tool, and the price is breaking above that pitchfork tool now and is heading towards the top of the second channel. I will remove my pitchfork tool for now, so that everything is clear. All right. So, to summarize this video, well, my objective was that to share with you and to explain to you my complex wave count. So, because as I start counting the wave for Hasbro Incorporation on the monthly chart, I was not going anywhere because it became too complex and don't know where to go. All right? So I switched to the yearly chart. So on the yearly chart, it was clear to me that this session here is an impulse wave. So there was a trend somewhere in 2010 upward. So that's sticking in my mind. And also, I look at the volume, the surge into the volume very often will signal the beginning of a new trend. So I'm thinking that probably a new trend is somewhere here. Okay? That's what we see on the monthly and the yearly chart. Then I switch to the monthly chart, and I was using a reference point 1990 to 1999. The market was trending. All right. There was a correction in 2000, which is good. So trending first, correction. From 2003, a new trend has been a commodity trend. All right, it was also here. In 2009, the stock market, okay, S&P 500 began a new trend. So the surge in trade volume that I see on the yearly chart has been here. First wave, second wave, third wave, fourth wave. Now the fifth wave is extended. And will the fifth minor wave be extended? That's what we are talking about here. I discovered that between 2003 and 2008, all right, there was a 1, 2, 3, 4, 5 waves, but that one did not go above didn't go too far away above the prior high. Therefore, I discounted and called it X wave. X wave, we connect two corrective waves. This is a correction here, another correction here. Now everything is aligning beautifully. So we are now ready, okay, to forecast the market, okay, expecting, okay, the fifth wave, okay, the fifth minor wave of the fifth wave. So now this is a wave count. So, but if you look at the bigger cycle, remember what we talked about before? Right? If you look at the bigger, the higher degree wave count, where are we now? So if we go deeper, we talk about higher degree, we'll say trending first, all right, correction, X correction. All right. So are you with me? Correction, X correction. So all this session, correction, X correction is a correction. So we'll say first wave of a higher degree, second wave of a higher degree. The second wave of a higher degree is correction, X correction. Now, 1, 2, 3, 4, 5 wave, this trending phase from 2009 is the third wave of a higher degree. So when a correction is beginning here, don't think that this is the end of this is. Are you with me? So if the correction, suppose this is the end of the fifth minor wave, if the fifth minor wave, suppose is ending here, and the correction is beginning, will you expect a deeper correction? No, not much, because that will be the fourth minor wave, okay, of a higher degree. So this is the first wave of a higher degree, and this section here, let's remove this. And this section here, this is the second wave, you see, correction, X correction, in fact here. Okay, this is a second wave, complex second wave of a higher degree, which is correction, X correction. Right, so first wave of a higher degree, second wave of a higher degree. Now we are now in the third wave of a higher degree. When that fifth minor wave of the fifth wave is completed, we will be expecting what? The fourth wave of a higher degree. Okay, before we see the real fifth wave of the higher degree. Are you getting it now? You getting it? You getting it beautifully now? Huh? So this is it. So I'm going to put I expecting a correction in this session. When that fifth wave is completed somewhere here, we'll expect a correction in this session. Okay, again, we can use those channel to help us to figure out how that correction may end. If it D below, this channel here, we will project it down. Again, market geometry down to figure out where the fourth wave of the higher degree will end. Now, the fourth wave can also become a complex wave. As you can see here, it can be also a bit messy. So don't assume that it's going to be swift and fast, but generally the fourth wave should be, okay, shouldn't take too long. All right. Why? How do we know? Because the third wave has been extended. You can see this is the third wave of a higher degree. From here all the way up here, that's the third wave of a higher degree has been extended. So the dominant force during the third area wave is bullish, which means the bullish traders are holding the market since 2009 up to now. But one more time, remember this, when we are I don't want to restart my computer now because I'm doing something. If they still mess up my recording, I'll be very upset. So I don't want to restart my computer now. So if the fourth wave, okay, the fourth wave of higher degrees computer will be expecting the fifth wave of higher degree. I don't want my computer to restart now, so I will wrap it up now. So if you have any question or suggestion, okay, put in the comment section, and in due course, I will be recording another video to answer your specific question. If you think this video has been useful to you, give us the thumbs up. If you think that this is another blah, 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 let us know by giving us a thumbs down. If you think that this is an essential tutorial, okay, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. Speak to you soon.